Hi, I am Becky Blavik with the Cooper Eagle team, and I am here with Andrew Cooper and Jacob George, both certified financial planners. And we are here today to talk a little bit about gifting. Um, so I have a joke for you, both, before we get started into that topic. Do you know why Darth Vader knows what you're getting for your birthday?
No.
Because he's felt your presence.
I have
That's
not
pretty
heard that
good.
one, Becky.
Not either.
So, speaking of presents and gifts, before we get into the meat of our topic, I just want to ask you both: do you have a particular gift that you've received that meant a lot to you, or just was like your favorite gift, or yeah, some sort of gift that has some significance in your life?
Yep. I've got a good one, I think. This was 2 or 3 years ago. My wife and my in-laws went in together to buy me a Flowbee, the vacuum attachment to pull your hair off your head so that you can cut it. Um, Very thoughtful. I started cutting my hair in college because I didn't want to pay for it, and just kept doing it because it was faster and it was fun. And the good news is I only cut my hair like 5 or 6 times a year. So, and it only takes like 30 minutes a time. So several of us at church started passing around the Flowbee to just different people's houses when it was time to get their haircut. And it actually made it back to me last week. We keep it in a backpack that from an old company somebody used to work at who passes it around. So that was my gift.
How big is a Flowbee?
So it's like a long cord. It's just like a different it's a different hose to attach to your vacuum cleaner.
Okay.
So it's about that size, and it happens to plug into the wall.
Okay.
Do any of your friends do the pets, the dogs with that Flowbee, or is that off limits?
Not that I've been told. Um, I hope not.
How about
Uh,
you, Andrew?
yeah, I was 17 or so. I was pretty active, working real hard, broke like a lot of teenagers, involved with church and nonprofit work and school, obviously, and sports, just really, really busy. And the car that I bought with my own money, very proud, of course, was a little bit of a beater and clunker, needed a lot of work. So didn't have the money for all of it. And over a period of weeks or months or a year or two, I think I amassed some pretty good debt back to my mom and dad who helped. And I think one birthday or one Christmas, my mom and dad gave me $1,000 or $2,000 check, which I didn't cash, obviously, but it was just releasing me from the car debt that I'd accrued over that time. So for my mom and dad, who were pretty modest growing up when I was growing up, didn't have a ton of expendable income, for them to write me that check was just huge and a huge burden off my shoulders. So I will never forget the love that my mom and dad showed me when they gave me that check and kind of wiped off my debt. So that's it for me. What about you, Becky?
Nice. Mine would probably be a sweater. It's a cable knit sweater that my parents got me like 20 years ago, I think. It's starting to unravel a little bit. But it was just given to me at a time in my life where like things just weren't going very well for me, and it's just it like feels comfortable and comforting. So that, and I was wearing it's not this sweater. I was wearing it a little bit a little while ago, but it's not like it's a little bit ratty now, starting to unravel. I think I said not in the best shape, but I love that thing, and I don't know if I will ever get rid of it. It
Hmm.
might be just one long string of yarn. um, Before I have to like throw it away or something. So,
Yep.
anyways, um, I like hearing about things that are important to you and significant to you. So, thanks for that.
Yeah.
All right. So, again, I mentioned we are talking today about gifting and how that kind of fits um, in your overall financial plan, I guess. So, Andrew, just can you tell me a little bit about gifting and why it matters?
Yeah, Becky, I'll start with a little bit of the philosophical. I think there's just something interesting about the human nature where a lot of things inside of us point to all we should be doing is looking out for ourselves, right? We have to feed ourselves, we have to take care of ourselves, we have to watch. Yet at the same time, the opposite of just taking care of me and making myself as comfortable as possible is also realizing that other people besides me, some of which have it significantly harder than me, also need help. So just the fact that there's an innate desire built into a lot of us to give tells us something important, I think, about the human spirit. So why do our clients with a lot of money, investable assets, and our clients with sometimes a lot less money of investable assets want to give? I think there are two reasons that people want to give. Number one, and most importantly, it's the right thing to do. Our clients who have some of the happiest and healthiest lives are the clients that make philanthropy a part of their plan and a part of their lives. And again, it doesn't just happen when they have a lot of money. Those clients have often been giving for years and years and years at different levels. And then the second reason to give a little bit more selfishly is there can be and are significant tax implications when you give. And we're going to break down just a few of those. Can be very complicated, but we'll talk about some of those today. So it's definitely the right thing to do. And then secondly, it is wise stewardship of your money if you give to the right organizations the right way and receive tax benefits from the federal government based on the U.S. tax code.
Great. So Jacob, can you tell us a little bit about some of those tax implications or, giving limits and that sort of stuff that folks might want to know about?
Yes. So how much can you give before you end up paying taxes on it? First of all, it's probably relevant to mention that the vast majority of us will probably never pay any taxes when it comes to money that we give away. And the reason I say that is because while there is a gift tax, a pretty hefty one, it only applies to you if your lifetime gifting, reportable lifetime gifting, would exceed about $14 million per person, assuming that the Tax Cuts and Jobs Act does not sunset, which probably won't. 14 million per person, that's $28 million per couple. And again, that is reportable gifting because we can also give very large sums of money away that doesn't even get counted towards that limit. And that annual limit is $19,000 for this tax year, 2025 year. So that's $19,000 for me, $19,000 for my wife, $38K combined. And again, me and my wife could give $38,000 to everybody we know and have it not even count towards our combined 28 million lifetime limit. So that is why I think it's important to note that as far as taxes on our gifting, probably won't apply to most of us.
And Jacob, Becky and I have a unique situation where we're working with a client that has young kids and got a sizable bonus. So some gifting is in the form of investing, and this parental unit, husband and wife, are going to try to put maybe $50,000 or $100,000 into an IRA. So a 529 for their kids. So you can do that one time, but because it's over that $19,000, you have to fill out that form 709 with the IRS just to track that specifically that 529 gift. You're allowed to do it over $19,000, but because it's over $19,000, you have to fill out the form.
Yeah. And thank you for mentioning, because I forgot which form it was. 709.
Yeah.
Good. That's good information and good for people to know. So Andrew, talk to us about how do people give?
Yeah. The easiest way generally, Becky, is just to write a check. So if you're writing it to an individual, you can gift that person $19,000, write a check if you want to be safe. Again, for 2025, the limits change. They usually go up every year, a $19,000 check per person. And for charitable giving, it gets a little bit more complicated because you can gift a check of $19,000. There are some cases where writing a check does not make the most sense. You could have made a purchase of stock or property in prior years that has significantly appreciated in value. So in many of those cases, it's more prudent financially to contact the charitable organization you want to gift to and gift and set it up so that you gift them that property. So for instance, if you wanted to give $100,000 and you bought stock for $10,000 many years ago, maybe it's worth $100,000 now. Instead of selling that stock and writing a check, you would have capital gains on that. You can just gift that stock directly to the organization, and with that process, you have no long-term capital gains or short-term capital gains on that stock because you're giving it to a charity. A couple things to note: be sure that charity is a 501c3, church, school, religious institution, hospital, other non-governmental charitable organizations, and anything over $250, the IRS is kind of a stickler. Be sure you get a receipt by the end of the year to be sure you can deduct that on your taxes. Jacob, am I missing anything there? Anything else to add?
I think it's perfect.
Great.
Another thing I would add as far as how to give is it kind of depends on what your age is as well. Very popular gifting after the age of 70 and a half is, of course, through qualified charitable distributions, which is just gifting out of your IRA instead of taking a distribution and then gifting that, because that can satisfy your RMDs. It can avoid increasing taxation on your Social Security benefits, Medicare surcharges, things like that. So
great.
Wow, yeah, that's also very good to know, and something that the normal person may not know, right? So that's good. Are there any other tax details or implications that there might be for gifting?
Yeah, Becky, I'll start with maybe folks at the lower end of the pay range and talk about some folks at the higher end of the pay range also. If you're giving away smaller amounts of money and if you don't have a home interest deduction, if you're married and you're gifting less than $30,000 a year, you're not going to get a big tax break because of the standard deduction in 2025 is $30,000 a year married filing joint, $15,000 a year single. So if you're gifting $10,000, there will probably be no tax impact to you in the course of a tax year. And the IRS also wants to limit how much folks can gift away and reduce their income. So for cash contributions, you can generally deduct up to 60% of your adjusted gross income. And for appreciated assets, stocks, property, anything outside of a retirement account, you can generally gift up to 30% of your adjusted gross income. And again, be sure you talk with your CPA tax professional to be sure they can confirm the details of your situation there. If you go over the limits, I believe you can roll forward those deductions into future years. But in those cases, it's really, really smart to work with a qualified CPA or enrolled agent just to be sure you're doing everything the right way, dotting I's and crossing T's.
Okay. And how about someone who has a little bit higher net worth, right? And so they might be gifting larger amounts of money. What should they be thinking about, or what options do they have?
Yeah. Yeah, I would say for the most part, it looks pretty similar. One tool that they might take advantage of is something called a donor advised fund. We usually call them DAFs. And essentially, that's just a way to front load your deduction that you receive for a gift that you will be distributing over time. So particularly useful in a case where you have money that maybe you weren't expecting, like inheritance, or you sell a home and you want to give a portion of the proceeds away. This is a way that you can take advantage of using your itemized deductions, even if you want to not distribute for the next several years, maybe. So as I say that, you can maybe notice that there are definitely some moral, ethical considerations around DAFs, but something that everybody kind of has to work out on their own for sure.
Great. Thanks, Jacob. Thanks, Andrew. That's a lot of information about gifting. Are there any closing thoughts that either of you might have?
Yeah. My economics professor at Harding, Dr. Don Diffenay, Nerdly Greenback, as he was otherwise known. He had a quote that I remembered for a long time, and that's essentially that real charity doesn't care if it's tax deductible or not. And so going back to what Andrew said from the beginning, the primary reason we give has nothing to do with the tax deduction. It's a happy benefit, but we shouldn't work too hard for the tax benefit if it's not completely cohesive with the gift and why we're doing it.
Mm-hmm. Andrew, anything to add?
Yeah, I think mine, Becky, would be as we've worked with clients over the years, as the Cooper family wealth has grown, right? It's interesting and ironic that money makes a lot of things easier, but more money makes some things harder. And there's a lot more responsibility the more wealth you manage. And because of that, there are more pitfalls also. So if you have money, if you want to leave larger gifts, there are absolutely legal, tax code, and moral requirements that you should be doing to help you be a better steward of your money. So it's good to have a team of professionals, tax folks, financial folks, and sometimes legal folks surrounding you, giving you guidance through the process. So I think that's my big takeaway. It's complicated, and as Jacob said, if you're doing it for the right reasons, your team will help you figure out the best way to give, the best means to give, and help guide you on the best amounts to give.
Yeah. So true. All right. Well, I think we're done. So thank you all for watching. And I want to add in this little disclaimer that every client scenario is different. Cooper Eagle LLC is a registered investment advisor. This video is for general education and not to be taken as financial, tax, or legal advice. Please contact a certified financial planner, a licensed tax professional, or an attorney prior for consultation on your unique situation and before making any changes to your financial plan. All right, well, cheers all. Thanks for joining.
Thank
Thanks,
you.
Becky. Thanks, Jacob.